Good afternoon. It's a pleasure to welcome you all to Citibank Earnings Disclosure Q4 2020 web event. I am Tariq Masood Qureshi, Senior Manager, Finance Division, Citibank, and I'll be your host for today. From the Honorable Bank Management side, we have with us our Managing Director and CEO, Mr. Masroor Arifin, our Additional Managing Director, Mr. Sheikh Mohammed Maruf, our Deputy Managing Director and CFO, Mr. Mohammed Mahabubur Rahman, our Head of Internal Control and Compliance, Mr. AKM Saifullah Kausar. We also have with us Mr. Zavid Iqbal, CRO and Head of Risk Management Division, Mr. Mohammed Zafrul Hassan, Head of Digital Financial Services, and Mr. Mohammed Shah Alam, Head of Treasury. As always, our attempt was to choose the most fitting time slot so that representatives from all over the globe, from the investment communities, can join us in this event. We shall start with our DMD and CFO, Mr. Mohammed Mahabubur Rahman, presenting the financial performance of the bank, followed by our Managing Director and CEO, Mr. Masroor Arifin, discussing the strategic positioning and initiatives of the bank. Therefore, we shall end with a question and answer session as usual. But before we go into the event, let me announce once again that we have already opened our question and answer portal, which is available at the window on the bottom right corner of your screens. To access the live question and answer session, you need to register yourselves by using the register button above the question and answer window and putting in some minor details which should not take more than a few seconds. You may also place questions during our presentation and speeches. We shall try to address them in our question and answer session, depending on the time available with us. Now, I would like to request Mr. Mohammed Mahabubur Rahman, DMD and CFO, to start with the financial presentation. Over to you, Mohammed Bhai.
Okay, thank you, Tariq. Ladies and gentlemen, Assalamualaikum and good afternoon. First, actually, I'll focus on the major component of the income statement. Simultaneously, I'll discuss about the movement of the balance sheet and other related information to explain our performance in 2020. So first, actually, I will explain our performance regarding the interest income. As you all know that 2020 was one of the most challenging year in our memories. So and in 2020, Central Bank has also taken initiative to help the industry, not only the bank but also the customer, and they have introduced interest rate cap of 9% from 1st April on all loan segments except credit card, and also later on they have also introduced interest rate cap on credit card as well from October with 20% limit. So and at the same time, Central Bank has also given benefit of loan deferment to actually help our customers from delinquency. So in our book, around 25% of the customer actually took the benefit, and Central Bank later on also given another instruction to defer the recognition of interest from this deferred book, and which also caused us 1.2 billion taka equivalent of interest income to the suspense account. And also we have disbursed 1.7 billion taka of loan under stimulus package for RNG workers, for which we have we will get 2% service charge instead of normal interest rate. So altogether, actually this has impacted our interest income, and you can see here that interest income has come down from 26.9 billion taka in 2019 to 23.2 billion taka with 13.6% degrowth. And if you look at the interest movement a quarter-on-quarter movement, you'll see that first quarter the interest income was 6.9 million taka, which actually represent a normal scenario, and which came down to 5 billion taka. And if you look at the interest yield, that also come down from 9.7% to 6.5% in the last quarter. But on the other hand, we have ended the year with growth in loans and advance. Our loans and advance has grown by 8.7% and stood at 269.2 billion taka from 247.7 billion taka. And around our loan book has grown by 21.4 billion taka. And here in the pie chart, you can see that which segment contributes how much to our portfolio. Corporate still actually contributes 54%, and followed by SME 19%, retail 13%, commercial 8%, card 4%, and others 2%. So even with the growth of loans and advance, actually our interest income has come down, and we have already explained the reason of decline of interest income. To address this challenge, we have also successfully managed the interest expense, and here you can see that our interest expense also come down, and we have reduced our cost of deposit. We will show more in the following slides that how actually we are managing our cost of deposit. The cost of deposit has come down from 16 billion taka to 14.8 billion taka with 7.5% decline. And in the middle of the slide, you can see the quarter-on-quarter decline of interest expense. In first quarter, the interest expense was 4.2 billion taka, which has come down to 2.7 billion taka in the last quarter. And the cost of deposit has come down from 5.6% to 3.4%. And similarly, we have also managed growth in deposit. Our deposit ended with 254.4 billion taka with 3.3% growth. The growth rate may look very moderate, but actually we have done tremendously well in customer deposit growth. Here in this middle of the slide, you can see that a customer deposit, even in the peak pandemic time, has grown by 12.2 billion taka. And on the other hand, we have released high cost deposit, which we have collected from bank, and we released around 4 billion taka of deposit from bank. And in this this very challenging time, our current and savings account, we call it CASA, has grown from 36.2% in 2019 to 41.5%. So it shows a very strong brand image of the bank and confidence of the customer in our bank, and also it shows the outcome that of various strategies that we have been taking for last 3-4 years. Like for example, we have introduced agent banking in 2019. Our agent point was around 300. We ended with more than 1,400 agent point in 2020, which has contributed growth in current and savings account. We have launched women banking, we call it CTRLO, which also is contributing in growth in deposit and also in CASA. Earlier, we used to have around 20% of deposit from women segment. Now it contributes around 34%. And we have launched digital account opening platform, which is also contributing high growth in CASA. Here in the graph, you can see that how actually we are improving our CASA acquisition capacity. For example, 2 years back, our CASA acquisition was around, in terms of volume, was around 848 million taka. Now, even in 2020, when we have suffered from COVID, the CASA growth was 1.1 billion taka in terms of volume, and in terms of number, we used to acquire around 60 to 70,000 customers in a year. And now we are acquiring more than 100,000 customers in a year. So it shows the benefit of various initiatives that we have taken. Our CEO will actually explain more regarding this strategy. But as we know that the yield of advance is coming down in the industry, accordingly our yield has come down from around 10.3% to 8.4%. But on the other hand, we have managed our cost of deposit, which has come down from 5.7% to 4.6%. But NIM has come down because of that, from 4.6% to 3.7%. But I can say only one thing, that with the continuous efficient management of cost of deposit, we will be able to maintain the NIM even better than this. And from 2021, actually, we have been observing better NIM, and hopefully we'll be able to give you better result in following quarters. Though we have faced challenging interest income, but investment income has given us a tremendous growth in 2020 because of the we have gained high profit from capital gain from government securities. Around 860, it has increased by 886 million taka. We have also, our interest income from government securities has also increased by 451 million taka. And also we have got some capital gain from selling shares. So because of that, our investment income has increased from 2.3 billion taka to 3.7 billion taka with 58.7% year-on-year growth. And here you can see the investment position at the end of 2020. Still we are holding higher investment compared to 2019, which shows that our earning capacity will remain better in following years. But this is related to Commission Exchange Bucharest. Actually, this is one of the most challenging area which we have faced in 2020 because of COVID. Because of that, actually, we have actually managed a moderate growth of Commission Exchange Bucharest income with 5.7% from 3.7 billion taka to 3.9 billion taka, and the following part of the slide, you can see that the import volume has decreased from 2.2 billion taka dollar to 2.1 billion dollar. With 8.4% growth. Export similarly declined 1.6 billion taka to 1.4 billion taka. It is related to our Citibank's import and export. But in the following slide, you will see the good news that definitely we have got badly impacted due to COVID. And for example, the blue line represents import business and a red line represent export business. With in import, we have started with around $241 million of export in January in 2020, which came down to $77 million in April and 91 million in May. But if you look at the following months, you can see that how actually we have recovered our business, and we ended the year with a very positive note. Similar thing also happened in export. So now we are witnessing this this growth in both import and export business from the start of 2021. Other income in our income statement, which basically represents the credit card business. Being a leader in the market, we actually hold more than 30% market share in credit card business. Definitely, this business has got actually badly impacted due to COVID, and due to COVID and lockdown, we have missed big festivals like Poila Boishakh, and Eid festival, which normally give high volume of business for credit card. And because of that, actually our income from credit card has declined from 1.9 billion taka to 1.5 billion taka. Number of issue of card has also declined from 56,000 to 41,000. Bill business has also come down from 91 billion taka to 86 billion taka. But again, if you look at this graph, you will see that we can stop worrying about this thing. Now the credit card business has come down, has come back to a normal situation, and even we are doing better than pre-pandemic situation. Both bill business and number of issue card. For example, bill business, we started with 880 million taka in January 2020, and which came down to which has come down to 325 million taka, 457 million taka in April, May. Again, it has increased to more than 800 million taka, ended with more than 900 million taka in December. And still we are having high growth in bill business from credit card. Similarly, if you look at the issue of card, it also indicates a lot of things that we started in 2020 with around 4,800 new cards, and which came down to 120 and 20 even in April, May. Again, now we are issuing more than 5,000 cards in a month. So it also shows a very encouraging picture for bank, and we are hopeful that we will be able to continue this situation. So we have seen the income part. Now the expense part is related to operating cost. Because of this challenging income, we have taken many initiatives to contain our costs. And here you can see that we have successfully actually contained our costs and to some extent reduced costs in many areas. And we ended the year with decline in operating costs from 10.3 billion taka to 10.1 billion taka, with 2.4% decline in operating costs. But cost to income ratio is showing higher trend because our income has decreased. In the following slide, we are showing you a little bit detail about the operating cost. We because of rationalization of salary and controlling of recruitment and replacement of employees, we could actually manage our staff cost at a similar level. But on the other hand, we have paid extra allowance of 60 million taka to our employees who have served during the pandemic period under the guideline of Bangladesh Bank. So we have maintained adequate safety measures, but we have paid this special allowance who have served the bank during this challenging time. Similarly, in the other operating costs, we have reduced the cost through renegotiating rental agreement and maintenance agreement with all major vendors, and we have successfully reduced costs from 4.9 billion taka to 4.6 billion taka with 5.6% year-on-year decline. But even with this decline, we contributed 272 million taka for as a corporate social responsibility. So we have donated this amount. So even after giving this high amount of donation to support the country during this tough time, we could manage the decline of cost. So you could imagine that how much cost we have actually decreased during 2020. So here you can see the summary of what actually I have explained. So our interest income has declined by 3.6 billion taka, but interest expense has declined 1.2 billion taka, which help us to manage our profitability. And investment income has increased by 1.3 billion taka. Commission income has also increased by 213 million taka. Other income has declined as related to credit card business by 407 million taka. So revenue as a total decline by 1.2 billion taka, and with a little bit savings from operating cost. Our operating profit has come down from last year. Last year it was 8.6 billion taka, and we ended with 7.5 billion taka, with 11.7% decline in operating profit. Now this slide is one of the most important slides in this presentation. Here we are showing the debt charge or the provision against a loan. In 2019, we have charged 2.6 billion taka as provision. In 2020, we have charged 611 million taka. Does it mean that we are actually we are not covering the risk? But on the contrary, actually, if you look at the provision coverage ratio, our provision coverage ratio has increased from 78% to 95%, and NPL ratio has come down from 5.8% to 4%. Both percentage and volume has come down. In terms of volume, the NPL was 14.2 billion taka, and it has come down to 10.8 billion taka. With this, actually, ultimately, with this provision charge or debt charge, we could maintain additional 1.6 billion taka of provision at the end of 2020. So that means actually with this less debt charge, we are even covering higher provision coverage. So in terms of risk management, we think that we are actually strengthening our balance sheet in much better way. So even after a little bit decline in operating profit, but with a very prudent way of managing our provision, we could actually achieve higher profitability in 2020. In 2019, our profit was 2.6 billion taka, and we ended 2020 with 4.3 billion taka. So with 65.6% profitability, profit after tax. So because of that, our earning per share has increased from 2.6 taka to 4.3 taka. So definitely it shows that we have ended 2020 with very high note, and because of that, our board is very happy to propose higher dividend in 2020. The dividend in 2019 was 5% bonus and cash 6% cash dividend. And based on the 2020 result, our board has proposed 5% bonus and 7.5% cash, which is the highest limit we can offer according to the Bangladesh Bank regulation. So board has proposed this, and we are now waiting for the AGM, where actually we are expected to get it approved by our honorable shareholders. So now this is the summary of the performance of our subsidiaries. I have already explained the performance of Citibank. Now here you can see the performance of our brokerage, one of the major subsidiary of Citibank. They have done tremendously well in 2020. Their profit was only 8 million taka in 2019, and which increased to 154 million taka in 2020. Our Citibank Capital Resources, the merchant bank wing of Citibank, they could maintain similar level of profitability of 166 million taka compared to 2019, and we think that this is a very satisfactory result, because in 2020, because of the pandemic situation, their many deal has postponed. So we are hopeful that they will be able to complete all these deals in 2021, and their profitability will even higher in 2021. CBL Money Transfer, this is a wholly owned subsidiary in Malaysia, is doing money transfer and exchange business. They had also a very good year in 2020. Their net profit has increased from 10 million taka to 56 million taka. And the last subsidiary is CBL Hong Kong Finance Limited. We have started this business just 2019, and just this is a new business, and because of COVID and other situation, they couldn't actually do that much well. But we are also observing that their business volume is increasing. So we are very much hopeful that it will also come to a positive result very soon. So considering all the performance of our subsidiaries, our consolidated profit has increased from 2.6 billion taka to 4.3 billion taka. So again, in terms of our consolidated performance, we have also done very well in 2020. So because of growth in profitability, our shareholders' equity has increased from 24.5 billion taka to 29.5 billion taka with 20% growth. Book value of share has increased from 24.1 taka to 29 taka in 2020. Return on equity has increased from 10.7% to 16.2%. Return on asset has also increased from 0.7% to 1.2%. Now the CRAR, which is one of the core strength of the bank, which has also, that Citibank has issued the first perpetual bond in the country. We are very much proud of becoming the first issuer of such innovative bond, and which has extended our Tier 1 capital. And by the end of 2020, we could raise 2.4 billion taka, and in first quarter of this year, we have already raised the rest of the amount. So we have completed the whole bond raising process. So at the end of 2020, our solo CRAR was 15.5% with 10.8% Tier 1 capital. Our consolidated capital was 14.3% with 10.1% Tier 1 capital. So with this, I like to end my presentation. So now I'm requesting Tarek to hello.
Yes, thank you, Mahbub bhai.
Okay, thank you.
That was a highly informative presentation. Now I would like to take the honor to call on our Managing Director and CEO, Mr. Masroor Arifin, to start with the strategic discussion.
Tarek, how much time I have?
About 10 to 15 minutes.
Difficult. Anyways, thank you, our honorable investors. Thank you, our senior management and our CFO, Mahmood Rahman, for such a nice deliberation on the numbers of the last year. I will try to be, for the sake of time, I will try to be short, but it's very difficult to talk about such, big strategic things within, say, 10-15 minutes. But a few of the things that I would like to say, which Mahbub has already highlighted, it was thanks to all of you, all your patronage and blessing, that we had a good year, despite the fact that lending rate cap brought down the NIM from 5% to net interest margin from 5% to 3.8%. But actually, the strategy that we took last year saved the bank from a disaster because of the lending rate cap. That was our effort to bring down the cost of deposit, which we successfully brought down from 5.4% to 4.6% within the last year, January to December period. But good thing is that our whole strategy is to carry that forward within this year too, and which is reflected in our number. As of today, YTD, year-to-date basis, the same cost of deposit, 4.6, today is at 2.84. Meaning that, the yield on advance that has come down from a 10.5 to 8.4 is somehow the hit of that, the shock of that is managed by managing the cost of deposit, which is the CASA game, the current and savings account game that we are playing. And another area where our same effort will continue is the cost to income ratio, which you will see that in absolute number, the cost to income ratio has gone up. But that's not because that the cost has gone up. That's because the earning has come down. Earning has come down by 8.5%. But at the same time, the cost came down by 3% from 998 million taka to 9697 million taka. 3% cost came down, which typically grows by 15-16% year on year in our bank. Now, even 10-12% also, if I may remember correctly. So that means we did something. Mahbub also highlighted on this. Those will also continue, all those efforts around, we'll spend more on developing people, on taking new management training batches, and also offering great kind of training programs to them, and also launching the, employer-related many other incentives, and increasing bonuses, and also looking at the salary level of people. We are doing that, and we will be able to do that also because we are now talking to Deloitte. The project is very much around 60% completed, approved by the board on the job evaluation side. So which will also, I believe, reduce certain staff costs, because bank will have identified by that time when the project is done where the bank is spending more than it should on staff, or number of staff, or salary in relation to the job the person is doing. So that is one. So I talked about our main strategy, cost of deposit reduction, also cost reduction. Now to talk about operating profit. That operating profit has ultimately resulted in a good year, because of certain good management of the shock coming from the interest rate cap, and also because of our successful abilities to manage the deposit cost, and to increase the net interest income, the fee commission income. You will be surprised to know that the Citibank's fee commission earning from 2000 2016 to 2020, if you look at from 3474 million taka, last year we earned 9265 million taka, which is 3 times our fee commission earning, including treasury earning from treasury bond, has increased. So this is a great strength of the bank. Now I will close my talk on the background of it by saying that you will see, or you will have already seen, that ROA is down. ROA ROA has gone up from 0.8% to 1.2%. Industry also is at below 1.5%, and I cannot, or you cannot expect our assets to give us more earning return when such lending rate cap is there, and our main asset is the lending asset, which is almost 70-80% of bank's total assets. So this has come down. This is at 1.2, which is at almost at market level. But a good thing is, what I look at is the ROE, which is the return on equity. That has, if you look at consolidated basis, that has gone up from 10.7 to 16.2. And if you look at solo basis, Citibank only, that also is from 9% to now almost 15%. I think hovering around, I don't have the number right now, I think 14.8 or 14.9. Challenge of this year is mainly the debt charge, or sorry, the NPL situation, and the central bank related deferral or loan repayment holiday that is going on. You know that we have been hit by, again, the COVID third wave. In Europe has been shut down. So the exports and the people connected, businesses connected to the exports, and also the medium segment businesses of our Citibank that we do. There's a sizable portion of the book. There, the government has now given a new reprieve of up to July for sure, and also for last year the stuck up working capital loans and working capital other continuous facilities. There has been 6 quarters of reprieve has been given, and in some cases 8 quarters of reprieve. But good thing is that in Citibank, if you look at the deferral book of Citibank, you will see that only 25 to 26% of Citibank's loan customers took deferral, and we are managing those 25-26% customers very well. You will also see that banks cash related, what the way we measure the loan repayment behavior of customers, we basically look at the cash collection of on a month by month basis. Bank's cash collection, which is typically 16 billion taka per month, that is again, thanks God, that has come to almost the same level of pre-COVID 16 billion taka per year, which means that, other than managing those 25% deferral taken customers, I do not foresee any kind of big risk there. Now, to come to provision, yes, the profit could have been higher. The 4.01 billion taka net after tax profit would have been higher if we had not taken, Mahbub has already highlighted on this, but still I'm repeating because this is important. We have taken, 1.67 billion taka worth of extra additional provision, which has already been taken as a cost. And after that, you will see that the provision coverage ratio has increased from 77.9% of last year's December 2019 to 94.9% provision coverage ratio now we are carrying. So this is one thing, and don't think that the provision that you've taken, new debt charge in last year 611 million, that only gives you a net figure. Before that, we have actually taken that 1.67 billion taka worth of provision. So the net is, last year we took that much of provision, and this year, it's too early to say the impact of this new circular that has come. We are still calculating. Still, we are, evaluating. This is very convenient for customers, but for us, it's like, again redrawing the whole game plan of 2020-21 because of this particular circular. The head of our additional MD and our head of wholesale banking and myself and CFO and CRO Zabid Iqbal, we're all busy with that. Circular came on only yesterday. Now to talk about the earlier game plans, digital financial services is very much important for Citibank. that other than the cost of deposit reduction drive through CASA account, other than that, and also other than focusing on the trade business, which is almost 50% higher than month on month for the last 2 months than last year's export-import business, because we focus very much on the fee and commission earning. So other than these typical things that we must do, we are also focusing on card business, which has done well, very much well, pretty well in 2020, and this year we have taken around 27-28% growth in card number and credit card volume, and that gives a sizable portion of banks' total revenue. Almost like 16-17% of banks' total revenue comes from there. Retail banking is also now doing well. So another thing is that our health-related activities that we take to safeguard the staff members' health. We have signed up with Evercare Hospital for that, for Citibank employees who are coming down with COVID. That will continue. One of the main focus will be to keep our staff healthy, to keep our staff, COVID-related risk-free, so that, they can give time. If they are unhealthy, if they are down with COVID, their family members are down with COVID, then nothing will happen. So that's the reason. One of the major thing that we are doing is, we are paying attention to the pandemic, in which way that is spreading within the bank or not. Typically last year, total number of patients at any given point in time in the bank from bank employees went up to 90 even, and now as of today it is at 16 or 17, which has again come up from 3 only. So we are busy with that, the top team of the bank, to safeguard and to give safety to staff health and safety activities. And more than that, I would like to say only 3 or 4 things. Capital adequacy level we are at now is quite satisfactory. Mahbub talked to you about already 4 billion taka tier 1 bond. Bank's capital base has grown, and tier 1 capital base itself is now quite healthy. I will not now give you the numbers, but I would only like to say that for the first time we have come to almost close to 4,000 crore taka, which is 40,000 million. I think 40 billion, if I am not wrong, 40 billion taka worth of total regulatory capital, and we have very good game plan with regard to asset growth. Capital is no longer an issue. Our issue is whether we are able to manage the bad debt and also keep the cost of deposit at this level by attracting more customers through digital means. Ekhoni account, Citibank account now, which we have launched last year, is growing fast. This is more and more customers are going there. To give you a number, 22,000 accounts have been opened there by using the Ekhoni account or Citibank account now app. And also WhatsApp banking is also helping us daily. We are dealing with something like 400 to 450 customer queries there. It's cost-effective way to stay connected with clients and provide information and services as and when they require it. And our QR code merchants, we have, as I said last year in the last quarter's earnings disclosure, that on QR code we are focusing very much, and the number speaks for itself. Right now, I have 17609 QR code merchants, and I have historically I had 30,000 POS machines, but the business is shifting to QR code. As you can see that already it is more than 50% of the bank's total POS machine that bank has set up in last 10 years or so. Nano lending with bKash, 39,000 loan customers have been tested. The result is very good. We have disbursed, amount is not big, 4.5 million taka. But the good thing is that the NPL is below 0.5%, and agent banking we are growing fast. This is also part of digital. The agenda is not to have a brick and mortar branch, rather at someone else's shop, you provide the services over iPad and other digital means. So agent bank point has grown to 1411. This year we are working on sub branch as well, which is three human being or 3 staff manned small 1,000 square feet branches. And market share in card, we want to grow. Union Pay project with Citibank has stopped because those people live, in China, and they got frightened and they couldn't come. But Union Pay acquisition, Union Pay new card issuing and acquiring both have started. And now, inshallah, this year we will grow Union Pay business as well. But today, as of today, we have total 31% of banks, market share in card. Another successful area where we are focusing is last one. That's my last point, is that we are focusing on SME, small and microfinance lending. We have disbursed last year 12260 million BDT, which is 12 billion BDT of worth of small and microfinance loan with almost zero classification. So these are the few highlights, and we will be launching Islamic banking this year. It is coming in June or in May or June. So this is one, and the focus, as I said, very much will be on reducing cost of deposit, focusing on the growth of the loan so that interest earning happens. And now that the cost of deposit has come to 2.4, meaning retail lending has also again become meaningful at 9%. Government bringing down the general provisioning of retail loan also by, from 5% to 2%. So that really helps. Now all this lending which are looking like, without any meaning at 9%, now most of them are looking meaningful at 9% because we have been able to bring down the cost of deposit. So in one word, the focus is on digital banking, and the focus is to grow there in digital banking, and also to look for or keep up the rate of non-funded income, non-interest income or the fee commission earning at the same level that we did last year. So that is where I'm going to stop, and I wish you all the best and wish us luck, at least so that we can stay out of the clutches of COVID. Thank you all.
Thank you, Arfin Bhai, for the insights. And now we will be going into the question and answer session. But before going over there, I would again like to make two announcements. One is you who have joined, you can still participate in the live question answer session by registering through using the register button on the over the Q&A window and filling up some minor details. And also, very shortly, we will upload the financial presentation on our Citibank website under the Investor Relations tab, where you will be able to view the presentation later on. Thank you. Now I think we will be moving on to the Q&A session, where we already have a few questions. I will start from the very top. The first question. Okay, I'm going into it. The first question is, Citibank has declared a dividend of 17% cash and 5% bonus, which is at the max tier. However, Citibank's CRAR is below 15%. How Citibank has declared a dividend at max cap? How CRAR will be managed in 2021?
If I may answer it, Mahbub. The thing is, we got a special approval, logical approval from central bank on that. CRAR should be at 12.5%. So CRAR, this is suddenly regulators felt that, we should, it must be 15%. So as a bank, as a solo institution, we were at 15.5. So because of consolidation with the brokerage and other 4 subsidiaries, it came to 14.7. So we basically went to central bank saying that instead of 12.5, we are at 15.5 or 15.6. On conso basis, we are at 14.7. So we must be allowed to give maximum dividend. And central bank listened to this. This is just a country's law which came arbitrarily without any logic or rationale. So we challenged it and they approved it. Thank you.
Okay. Thank you, Arfin Bhai. I think that clarifies. The second question is, bank's deposit strategy looks aligned, but how difficult will it be for corporate lending in the wake of second wave of coronavirus around the country?
Maruf silent hai so.
Just yeah, sorry, yeah. Yes, it is. And I must thank for such an timely question, because market is very liquid, as we all have noticed that interest rate is going south, and is right now probably is much below than the country's inflation rate. Market is in this extreme liquid market scenario where the investment rate is not as per where the regulators or the government want to see it. It is an extreme situation for us to have a growth in lending. Having said that, I must mention that over the last 2 months' time, despite the fact that the market is very liquid, despite the fact that the rates are very low, Citibank was able to grow its book by 25 billion taka as I can say year to date, and I must tell that it was not that the growth was not at the cost of credit risk. We are very prudent in terms of selecting our customers, but I must tell you that it will be an extremely difficult year for us to have a growth in asset in this extremely liquid situation where the market interest rate is very low and credit appetite is not as high as it should be. So it will be a challenge. We have faced this challenge so far successfully with reasonable growth in our book, and we hope that we will be able to meet their expectation in the whole year, keeping all the challenges intact, because our in the kind of portfolio we have, we still see that there are some room for us to have some asset growth in a reasonable interest rate. Thank you.
To supplement this, actually, this response, actually, as Citibank is maintaining diversified portfolio, so if we have challenge in one area, so Citibank can actually manage its performance through growing in other areas. So, for example, even in this situation, we have been observing a high growth in like retail loan and other small loans also. So, having a diversified portfolio, we think that will be address the challenge as a whole, actually.
Thank you, Mahbub Bhai and Maruf Bhai. Moving on to the next question. What is the update of Union Pay Citibank card launching?
Zafrul, can you please answer it? Union Pay total thing. In short, Zafrul.
Yes. So we have launched debit card of Union Pay, and we are offering in the market. But the level of scale up that we thought we could not really do it, as our CEO Mashoor Arifin mentioned that the pandemic and the proximity and the physical presence of them has hurt a little bit. But we have started that business, and we are issuing debit card. The next stage will be for us to scale up. So that's we are waiting situation to get better, and then we'll scale up. Thank you.
Thank you, Zafrul Bhai. Okay, moving on. Our next question is regarding NPL. The question is, what strategy will you take for better NPL management in future?
Zabid Iqbal.
Yeah, we are interacting with the customers, have a liaison dialogue with the customers, and get the customer engaged to regularize from these stress and NPL accounts. So our relationship managers are working very closely with the customers, and if situation demands, if we need to stress out, make it scheduling and make it helpful for the customer, we are also doing that. So it's a combination of both risk scheduling, dialogue with the customer, and trying to maximize the collection of money from the customers.
Thank you, Zavid Bhai. The next question is, what is the current average lending rate for SME, corporate, and retail?
Shall I? Or Marsha, you answer that? You're mute, Marsha, you're mute.
Sorry, sir, I got a phone call from Chairman. Maruf, I missed the question, so please answer.
I mean, it is the question was the average rate of SME, retail, and corporate. So since there is a cap of 9% on interest, so in no case all the interest rates are capped at 9%, but due to market excess liquidity, the rate has come down much below from 9. I would say that depending on the segment, the interest rate is hovering around from 7.5% to 8.5%.
Thank you, Marufai. Before going into the next question, I think we are nearing the end of our time slot. So maybe we'll be taking only 1 or 2 questions. So if anyone have any other question, please do it immediately, and we will be closing our event shortly. So moving on to the next question. What strategies are you taking for further improvement in CASA ratio?
If I may answer, Zafrul may also supplement. CASA is our main goal. As I said that, if there is just 1 or 2 main moves that we have taken, one of that is the growth in CASA book. Now, CASA book growth, deposit book, you see the mix has grown from 35%. Now the mix is 41%. And, the 246,704 million taka CASA book is now 255 billion size. So the low-cost deposit, if you look at CASA and also the deposits which is rate is below 3%, that is now 55% of the bank's total lending book. So that is the reason the cost of deposit is coming down. And how we can attract that is that our focus in women banking, and Mahabub mentioned it, is a new focus. We are looking for CASA accounts of housewives and also salaried employee women customers, and also women customers engaged in certain business activities, and also women customers in different services like teachers and others. So we have got a specific focus on that area, and also we are trying to bring, or we are actually bringing new CASA accounts from agent bank points. These are all CASA accounts, plus we're opening CASA accounts of all our merchants of card business, all our small and microfinance customers, and also other customer lending customers from the medium segment, the individuals who are behind those. So certain activities are going on, and on top of everything that we are mostly focusing is on the employee banking. We are signing up continuously with major corporates, major the factory owners and other business houses, and we are bringing their salary accounts one after another. We have recently had certain big catches, but you won't recognize these names. That's the reason I'm refraining from that. But you can say that we are very much poised by the end of this year to become the second biggest salary account maintaining bank. We are including certain salary accounts of certain embassies. The work is very much on. So the CASA effort is a branch-based effort. CASA effort is a digital platform-driven effort. CASA effort is an effort that comes from agent banking, and I believe it will take a new shape. And also from employee banking, it will take a new shape when Islamic banking is launched.
If I can add just one line, the fundamental reason why we wanted to digital is that we wanted to reduce the cost of customer onboarding. So once we can have it, with the same capacity, we will be able to onboard, a huge number of customers. So that's what we are targeting. If you see year-on-year growth in terms of number of customers that we have onboarded, it's hugely improved. And in the coming years, you will see a tremendous improvement in terms of number of new customers that we can onboard. So and going digital will make this task possible for us in terms of financial term. Thank you.
Thank you, Arfin Bhai and Zafar Bhai. I think we have very little time, and we also have only one question left to answer, as I can see in the portal. So I'll take it as the last question of today's event. And the question is, what is your 5 to 10 year vision for growth?
Very easy question now that we have talked so much about all the strategies. 5 to 10 year growth to focus on scale. Bangladesh is an emerging fast growing economy, and it's now a developing country. And we want to pay respect and attention to that, pay heed to that. We don't want to be an urban centric small boutique institution. We would like to go to people by means of issuing plastics, by means of acquiring or helping them in doing their payments, by means of focusing on individuals of small ticket size, CASA accounts, and also retail loan, and also small and microfinance segment, which basically will mean that the corporate lending book, as I said in the last quarter as well, will ultimately will be 50% of the bank's total lending book, which is now at 63% of bank's total lending book. So, so that means we will be focusing more on certain segments: retail, cards, and small and microfinance. 3 on the lending side. And another strategy is to open up, is to place many kinds of machines and other digital means so that customers can be onboarded without having to come to the branches. So that itself is something simple to say, but very difficult to achieve in a country where digital literacy rate is still low. So we are fighting. We are kind of working as the tide of the time because of the literacy rate of the country, but still we are focusing on digital nano loan. We are focusing on other digital onboarding areas, agent banking, and another strategic change this bank will have is deposit mobilization will have a serious Islamic banking edge in that, while we keep full focus on our serious strength in the power sector, in the RMG sector of big corporates, and also a very much trade-friendly institution which handles more than $5 billion of trade business. So that will go up. So without hurting or without reducing or diminishing the importance of corporate banking or trade, rather nurturing and taking that to further new heights, our focus mainly will be on a small microfinance, retail, digital driven people's bank. So that is where we see after 5 to 10 years time, a bank which is smaller in size in terms of number of people, because by that time all this Deloitte and all these projects will have will have completed. So I believe a lean institution which is focused more digitally in terms of acquisition and lending money to people. And also I see we collaborating with other big payment companies, not only with bKash, but also with telcos to leverage on that in the scale side.
Okay, thank you so much, Arfin Bhai. I think, I believe we have reached the end of our today's event. And thank you all for participating. And it's a pleasure to have you all with us in this evening, and all the participants from local and abroad from the investment communities. Thank you for your trust in Citibank. I wish you all a very good evening. Thank you.
Thank you, Tariq.
Thank you all. Thank you.
Thank you.
Thanks. Thank you.
Thank you, everybody.